in the next few days, but after being badly battered yesterday, people want to know what to do at these levels. Should you start dipping your toes in the water, as one of our experts said?
Morning, Tamana. No, so I think the point is pretty simple. The structural story is going to continue. Nothing has changed overnight as far as the India growth story goes. The second aspect is obviously you need the markets to settle down. And what we've seen historically in the past, post-political mandates, post-election mandates like these, right from 2004, 2009, 14 being examples as well, even 2019, the markets will move on after the next few days and the markets will reset themselves in terms of what comes next. So obviously, I think over the next few days, as I mentioned in my opening remarks, what happens in terms of key portfolio changes, what is the 100-day agenda, do we still stick to that path, what gets announced in the budget is going to be extremely critical from a market standpoint. Will the markets be volatile till that point of time? Absolutely, yes. Have the markets made a near-term top at this juncture? Our feeling is yes, probably I think a near-term top has been made unless you receive more clarity over the next few weeks based on all these factors put together. But again, I think as seen historically in the past, Tamanna, in periodicities like these, defensives come to the fore again. You'd seen in the 2019 call as well, when the COVID crash happened, defensives were the first stocks to move up over the next 2 quarters. FMCG, pharma and IT moved up significantly in the first 2 quarters. And I'll not be surprised if the similar story plays out this time round, at least for a quarter or two. The markets then reset themselves and then the other sectors start coming into focus as well. So it will be a defensive-led market, maybe a near-term market top has been made. So I think you will get time and opportunities as the market resets.
So Mayuresh, did you give any specific calls or not?
No, not at this juncture, because I think we've lightened our positions, Tamanna, quite significantly. We just want to wait over the next few days to start.
Okay. So you're not buying anything today. You're not coming in. Okay. First, rates are hitting your screen, and of course we'll wait for them to settle, etc. But they're looking positive. They're in the green. There will be a clawback after the battering yesterday, and it has to be seen in that context. When you sort of lose 6% or plus on the Nifty, then you should be happy if you see a spot of green. And Neeraj, you were making this point that we will see a selling pressure on any kind of rise.
Major rise, yes. Very likely could happen. I mean, that the markets may rise as a rubber band which is stretched as it was yesterday, but does that get sold into is a key question as well.
You may not see a sharp rise, Neeraj, but you may not even see a sharp fall. I think that's the best case scenario we can hope
meander
for.
Along.
Yeah, just a painful grind where it'll be tough for traders for sure.
Yeah, completely directionless.
Money.
You're right.
Yeah, it's going to be very, very tough, and we're not trying to sound like pessimists here, but it is what it is.
Yes.
We should also welcome in Amnish Agarwal. He's joining us. He's head of research at Prabhudas Leeladhar, to talk to us about, guess what, FMCG, that's back to being the biggest talking point on the street over the last 2 days, very quickly taken over from all those manufacturing, infra and defense themes. Amnish, morning. Thank you very much for joining us today. Last couple of weeks has seen traction back into FMCG stocks. It does seem like there's hopes of revival in rural demand. Rural demand is expected to see a rebound in FY25, and of course, with a little bit of chatter on the street and the outcome that we've seen from the election, there is a sense that populist measures could find their way back. Is that a positive for rural demand? Do you think that's a likely scenario from where we stand right now with regard to rural?
Hi. 2 things here. First being that rural demand is already witnessing some sort of a revival, even if you look at, say, last quarter numbers. Plus the fact that as against deficient monsoon last year, we are going to have a normal monsoon. So these 2 factors are positive from the standpoint of rural demand. But having said that, today your agriculture income is not more than 25 to 30% of the rural income. So the impact of that usually is very limited. Now coming back to sector, coming to some sort of a limelight, you see the main thing is that the sector has not been doing well from the last couple of years, barring say some stocks here and there. And it is not that the stocks in the sector, they have become too cheap. It is more like a trade. For example, right from 2009-10 till say until couple of years back, the trade was everyone was continuing to buy, you can say defensives like your consumer, private banks, IT, and then the trade reversed around say 3 years back. Everyone started going for infra, your cyclicals and all. Now, if you look at pure valuations, are the stocks cheap? The answer is no. Whatever little valuation gap was created, that valuation gap has got bridged due to the movement which happened, say maybe a month back, or maybe many stocks were up by say even 5-6% yesterday. Going forward, is there a scope for earnings upgrade? That could be if the demand, you can say, increases on the positive side, but margins have got very little scope to expand from here. So I think the sector can do well purely because there would be some sectoral rotation. But coming to your second question of some sort of freebies and all, I don't think that is going to happen. Because if you look at, say, elections per se, the NDA never doled out any freebies in their manifesto. Okay. And that is one of the reasons they might have had some sort of a battering. Now, the kind of mandate which they have given, they will be focusing more on growth, and eventually some of the earlier themes might come into play. But the kind of sideways or the weakness which was there in the consumption, that might not be there incrementally.
Okay, Amnish, so one can't argue for a P multiple re-rating because these stocks are not necessarily cheap per se, or they have ever been cheap. And earnings growth is a factor of what could happen over a course of the next 2 quarters. So my question therefore would be that if you were to invest into FMCG currently, would it be a hope trade at best, because you do not have clarity about what could happen to earnings and you can't bet on a P multiple re-rating any which ways?
Okay, you see, actually we were very negative on the sector, and we turned positive, and in fact in our model portfolio also we turned overweight just 10 days back, looking at this sort of an uncertain scenario. But having said that, the markets have moved up much faster. For example, you look at a stock like say HUL from 2150, I think it is already 2400 plus. Now, can it give you 25% return from here? The answer is no. Can it give you a reasonably good trade from here? The answer is yes. So, because the valuations are not cheap, and unless and there is very limited scope for margin expansion in most of the names, I think from here on, they can provide you a good hedge. They can give you, I would say, reasonable return, but not something like a secular returns of 15%, 20%. That kind of a scenario is not there, for sure.
So, Amnish, in that case, your top 3 picks from the sector at this juncture, if you have to pay mass consumption, what would you buy?
You see, HUL was a good trade, and so Britannia, but I think some of these stocks have already run up yesterday. So as I said, they might give you, say, another 10% or there, but some other broader segments, some of them in auto, some of them in durables, they might actually come into play. And my sense is that as far as pure staples are concerned, one can look at, say, liver, ITC might remain weak till budget. But if in budget there are no punitive taxes on cigarettes, then I think around 415, 420 ITC actually looks to be the best trade. Someone who wants to take a bet and a little bit of risk at 415, ITC actually offers around, say, 15% upside potential from here. I think rest it all depends. For example, Dabur should benefit from rural, Imami should benefit. But at this point of time, they are just, you can say, they are not like a secular, very big trade which will give you very hefty returns from here.
Amnish, very quickly, I know the focus largely is always on mass consumption, rural India, but just before we have to let you go, anything in the urban consumption space, is that anything that you're constructive on here that could see a bias and uptake in urban consumption?
You see, in the near term, if you look at, say, urban consumption, some of the jewelry companies, I think for the at least first half, their growth will be muted. They will remain under pressure. QSRs are also not doing that great, and so are some of the, you can say, modern retail-centric stock. So my sense is that some of these companies, whether in the jewelry or the QSR space, so in terms of, say, worst, we might have seen the worst, maybe another quarter or so. So someone who can, you can say, wait patiently for 3 to 6 months, one can nibble on these stocks at lower levels for some reasonably good returns to be made over the next 12 to 15 months.
Okay. Amnish, lovely having you today. Thanks for taking the time out and agreeing to join on such a short notice. Really appreciate the time. That's the view from Prabhudas Leeladhar. Remember, the bull case on the index was based upon continuity since there is a question mark on the policies. There's no point talking about that target per se, and which is why we haven't invoked that question. But as the pre-open rates are settling down, let's just see what's happening to the index at 908. The Nifty is up about 1%, slightly better than the implied open was indicating. So 243 points. So there is a recovery. You're looking at a recovery, ladies and gentlemen, and it may be short-lived. It may not be very large. We do not know that. But for now, you're looking at a positive stance on a clutch of names, by the way, which are doing well. So the Adani Group stocks have bounced back. Adani Ports and some of the others are doing well for themselves in the session today. So watch out for those. 2.5% higher. Adani Ent is up about 3% as well. There is Action Construction up 6%. GMDC is up about 6%. PSUs are making a bit of a pullback. Sudeep, very quickly, this bounce into PSUs, would it entice you to do a trade, either direction? ONGC, REC, a sale, would you trade them?
Neeraj, I would wait for a couple of days because see, a lot of things would depend on how the government structure is there, what ministries goes to whom. So I guess there will be a lot of markets also would be on the tender hooks. It might be that today we might see some of a small pullback in these names, but definitely they'll be a bit volatile. So from a trading perspective, I would just like to avoid this space at least for the next 2 to 3 sessions until and unless some clarity emerges.
Got it, got it. So the fair answer, and I think Mayuresh's answer probably would be the same as well. He said he's sitting on the sidelines for the time being. Let me get in my colleague Harsh, who now joins in with some of the brokerage views on the post-election view that has come in. Harsh, which is the brokerage house that you've chosen?
Well, Neeraj, I'm going to more specifically focus on the financial space because that one really took a bit of a punch on the chin yesterday, especially the PSU bank side of things. And we have a very interesting note coming in from Bernstein. Well, they are clearly suggesting that the results were a bit of a surprise versus the thumping majority which was expected. Concern, they believe, will be coalition politics as well as the impact of that on policy decisions. Capex-led growth in corporate credit, coming to the financial space, Capex-led growth in corporate credit may not kick off as quickly as expected earlier. PSU bank reforms also. Bank reforms from a perspective of external hiring of senior management, potential privatization, loan waivers, some of those aspects of PSU banks in terms of policy may change a little bit, which makes them slightly less favorable in the current environment. Increased welfare as well as rural spending may also delay rate cuts is what they are starting to believe. Of course, PSU banks slightly less favored than private banks for Bernstein, and within that pack, Axis is the outperform at 11%, along with HDFC, an upside of 42% given from the current market price to HDFC Bank. Market perform on ICICI Bank at 1250 with a 17% upside, Kotak at a 7% upside, and SBI at 810, just about a 5% upside.
Right. Thank you for that, Harsh. That's the brokerages and their calls and trades after yesterday's carnage. It's not looking bad, and we said that it was a likely scenario where the markets will see a little bit of a recovery, even if it is just a technical dead cat bounce. For now, it's going to be a sigh of relief for anyone who opened fresh long trades towards the second half of trade yesterday. But like we said, it would take a brave heart to do that as well. Sudeep, in banks, I don't know whether we've talked to you about Bank Nifty. Is there a trade on Bank Nifty this morning? If you do get a flat to slightly higher start, maybe for the whole month, could that be a long trade there or too volatile to call it?
See, currently too volatile to call it, and secondly, see, yesterday from the lower levels from 21,200, we saw a good recovery in Nifty, but similar was not the case for Bank Nifty, and Bank Nifty did not recover that much. So I feel there is some kind of selling pressure which was there in banking stocks, the financial names, and that took it on the chin. So I feel one should just wait and watch for a while. We should be crucial levels on the downside would be around closer to 46,500, 46,400, which could act as a strong support. And on the upside, now I feel 47,450, 47,500 needs to cross, and then only we could see some kind of a sustained recovery. If we see the put call ratio from a weekly expiry perspective, also that also is around 0.5. So I feel there could be selling pressure on rises. And one should post this initial opening, which would be in the positive. One should just wait and watch for at least 15 to 20 minutes to get the rates settled.
You know, just a take on the entire oil and gas pack, completely firing. Sudeep, oil and gas, some of those public sector enterprises back up, at least in the pre-open session, SJVN, NHPC, etc. Anything that, you know, you would want to put on your list? You're saying wait and watch, but put on your sort of shopping list for a few days?
Yeah, see, both these names have been good in the last several months. See, it is just because of these election volatility that election-related volatility that we have seen a sell-off in these PSU names. But the narrative, but the long-term structure, the story regarding the power consumption, the power production, and the deficit, that still remains the same. So, post this initial jitters of the first 15 days post this election results, I feel things would come back to normal, although we might not see the speed of the move that was there earlier in these names, but at least from the current levels, from an investment perspective, they would be a good pick.
Okay. Gentlemen, stay on. Mayuresh, I need to talk a bit more to you about some specifics and, I know Sudeep is not wanting to take too many trades, but we'll still try and figure out the views on some stocks from an intraday perspective, if you will. I think it might become more difficult to take positional trades, 3-4 days trades, because you don't know what's happening in the ensuing day. So people might not have the guts really in a very short term to take those kind of trades. But we'll ask Sudeep about that. Here's how the markets are starting this Wednesday morning, a day after the election verdict. In the green, yes. How much is the question? About 1% for now. Staying aloft. Yes, about 1%, so about 200 points. Or maybe cooling off a little bit, actually, quickly, about a third of 1% now. The Nifty Bank staying okay, about 0.86%. Wonder if IT and mid-caps are also holding out, about 1% for the mid-cap index. And the small cap index will come up on your screen as well. Had a brutal beat in some of these. Nifty IT 2.66%. So very quickly, we've cooled off from the highs of the day at the very least. Let's see if we hold on. I think keep an eye out on this number almost every single minute. Let's get the heat map up on the screen and see what stocks are moving and what are not. So clear bent towards oil and gas and defensive. So HUL, another 4% today. That's a really sharp up move there. And then Tata Steel, global commodities coming to the fore. Adani Port shows a bit of a bounce back after the battering yesterday, but oil and gas, ONGC, BPCL right there. M&M takes a bit of an uptick. We had Matt Orton coming and talking about how M&M has spoken all the right numbers to them in the conferences, at the BOFA conference apparently. Asian Paints bounces back again because of the crude downtick, I would presume. So a lot of crude beneficiaries and defensives out there in the fray this morning. What's losing out? No surprise, Hindalco down 5%, Novelis IPO postponed. So after the 6% downtick yesterday, another 4%. So cumulatively 2 days, about 10% loss for a Hindalco. L&T continues to grind a bit lower. Otherwise, no notable losers. Actually, now the index has come back as well. So not a bad start, you would have to say, considering the kind of gash that we had yesterday. Net, if you look at it over a 3-day period, we've lost a little. From the levels that we started off, let's say 22,500, we went to 23,300 or thereabouts. We're back about 400 points. That's okay.
So you mean if you sort of cancel out Monday and Tuesday?
Yeah.
If Monday and Tuesday could cancel out each other, if you could just skip those 2 days, you know, and come back to it, you're doing relatively okay. One of the reasons is likely, like we spoke about this morning, that now you have clarity, you have a Modi 3.0, you have a mandate, and you know, you have basically what the street expected, maybe with a bit of tweaks here and there. I just want to see what the broader markets are doing this morning. And frankly, it's not as bad as could have been. So about 1% up on the mid-cap. We'll pull up the small-cap index as well, over 1% up. What is working this morning? And you might see, some repeats there, but definitely in terms of hopes for a rebound in the PSU space, I want to pull up REC, PFC, because these stocks at one point were 25% down yesterday. Not that they're rebounding massively, but they are in the green today after those, pushes. Vodafone, ONGC, SAIL are some others that I would put in that category. ONGC and RIL, though, also got the CLSA boost, which has looked at them as top picks, but all of them doing well. I don't know if you can quickly pull up an Indus Towers, because Vodafone and Indus Towers both hand in hand. And remember, all of your telecom stocks have been moving on the hopes of a tariff rise. Is that still in place? It seems like it could be 1.5% up. Consumption focus, and Dabur is one I wanted to see, because Dabur was a complete star yesterday when everything else was doing very badly. So Dabur also, after a 6% gain yesterday, 3% up today as well. Let's look at some of the oil and gas pack this morning. HPCL, BPCL, ONGC. Crude prices are down 3%. Not great for ONGC, but doing okay. So there you have a spot of green as well. Just want to pick up Angel One for a news flow. They've given their business updates, which are pretty good for the month. Remember, after a couple of days of all of this frenzy, you're going to get back to the bread and butter of what we watch for companies. And Angel One's monthly business updates are decent, 4.5% on that stock. And at least that's one spot of a stock reacting to news. Samina, you'll have more of those over the day as those concerns over policy continuity ease.
Yeah, it is the calm after the storm, right? So it's not... runaway rallies are still not visible on the street. There is still some selling pressure, but it's a stark contrast from the nervousness that we saw on the street yesterday. Bank Nifty is trading flat. The Nifty itself may be off the day's high point, but still trading with a 200-point gap up as we see it. And the broader markets, if we can pull up the Nifty and the small cap and the PSC index, it should be helpful to tell. Broader markets still in the red, so not seeing any meaningful recovery there yet. Small cap index down 0.7%, and the CPSC index, after a 23% fall yesterday, continues to see a downtick. The reason you're seeing green on the Nifty is largely on back of what defensives are doing. So FMCG is up 2.5%, but barring that, most other sectors are still seeing some pressure in trade. In terms of movers, we'll start with the gainers. Keynes Technology is up 5%. Motilal Oswal, Angel One, you had those numbers coming from Angel One on client additions. The stock is doing well on back of that. It's up 4%. Taking along with it is Motilal Oswal. You've also got most of those capital market players that are seeing a little bit of an uptick in trade this morning. City Union Bank is up and about 3.5% higher. Wellspun Corp is looking okay. Natco Pharma, Colgate, Bombay Burma, HFCL are stocks that are trading with gains of 3 to 4%. But just to put this in perspective, your biggest gainer on the street this morning is Keynes Technology, that's up 8.5%, and HUL, that is seeing a gain of nearly 5%. On the sell side, defensives are still having it very tough. Bharat Dynamics loses another 10% in trade this morning. Remember, we've seen the stock gone up so much in the last couple of weeks ahead of elections. After yesterday's cut, it's down another 10% this morning. And so is Garden Reach. Bharat Dynamics, Garden Reach, HAL are all those names that were election favorites that are seeing some selling pressure this morning. You've also got railway stocks, Cochin Shipyard, Titagarh Wagon, Jupiter Wagon, Texmaco Rail. Texmaco actually shouldn't be doing too badly. They've signed a deal. We don't know what the deal is, but the stock not reacting positively to that either, 5.5% lower. Hudco, Ircon, the pain is there. Anything that's ran up too sharply in the last few days continues to see weakness. While we're hoping there's a little bit of a recovery through the day, there's also a good chance that long positions that were standing on Monday may actually be tried to cover at lesser losses if possible. So I think that's what could be happening on the street. The Nifty 50, well, it's well off the day's high point now. Back sub 22,000. And remember, the only green you're seeing is FMCG. beyond the frontline names, everything else is still looking very weak, guys.
Yeah, sell on any rise. Look at a Bharat Dynamics today, 10% down. Some of your, I think, defense stories are also still going to continue to see pressure. RVNL, BHEL, if I club this all in the policy-driven sort of bucket, that pain still visible.
Yeah, and that's the question to ask Mayuresh before we let him go. Mayuresh, so if you had these stocks in your portfolio, and these stocks are down from the highs we know, would you still get out of them?
At the moment, yes, because I think the market is looking a little wobbly, Neeraj. And these stocks have moved up, let's admit. They have moved up 3x, 4x, 5x, and valuations had become insane. As I've time and again mentioned that there are structural tailwinds, but at some juncture, valuations and price points, both were probably not in their favor. With an event risk like this, do numbers change on the balance sheet? They might not. The only risk that these stocks that they carry is execution risk. But again, I think it's a sane strategy. I think if you have a decent portfolio, I think booking or partly booking some of it still makes sense in my opinion. I think some of these stocks might be on lower circuits now. But I think as you get an opportunity, at least lightening up a few positions within these spaces can be a good strategy. And then let's wait. Again, I think the markets will reset over the next few days and a couple of weeks. And you will get opportunities on those lower levels in good quality sectors and stocks. So yeah, I think partial booking in these stocks is something that investors can probably do.
Tamanna, Heritage Foods is up another 8%. So, you know, some political linked stocks sometimes give you some very smashing returns. Mayuresh, we'll take a moment to thank you, of course, for joining in today and giving us your thoughts. Difficult as a time it is to give, but thanks for sharing those thoughts. Sudeep, HDFC Bank is showing some stability today after the slam dunk. Usually most people have said that this is the bank that they would revert to in the event of they wanting to buy. Would you go out and trade HDFC Bank?
Neeraj, if my view is from a medium-term perspective, yes, I would go and add HDFC Bank to my portfolio. But from a trading perspective, I feel 1520, 1540 zone will be an important resistance on the upside for the next few days, since we are seeing some kind of selling pressure on Bank Nifty also. So 1520, 1530 from a trading perspective, an important level to cross. But from an investment perspective or from a medium-term holding perspective, it is very close to its support zone at 1450, 1470. It's a rising trend line support zone, and that's a long-term support zone. So I feel 1450, 1460 can be a good stop loss, and one can continue holding this bank from a medium-term perspective.
Sudeep, wanted to get your take on an Imami, on a Dabur. You know, all of these having another very good day, HUL, that entire pack actually. Is there a short-term trade over here to be made?
Yes, HUL specifically has given a big breakout yesterday, and we are seeing incremental gains today. It has even crossed a resistance which was there around 2530, 2550, and with a gap like this, and it's sustaining also against the backdrop of the selling pressure in the market post opening today. So I feel HUL can be held at the current levels. One would, if someone bought this at lower levels, then 2450, 2500 should act as a trailing stop loss, and this move could continue up to 2750, 2800 also. Because all you know, in the next few days, if there is a further volatility into the markets, all these high beta sectors are still a bit wobbly, then these defensive names will still continue inching up higher in order to support the markets. So I feel yes, HUL, Imami, Dabur, Kolpal, or Godrej Consumer Products, all these names would find buyers at lower levels in case there are any dips in between.
You know, I mean, HUL, Dabur, etc., just really strong moves. You know, you may not have seen this chart, Sudeep, but I'm just throwing this out of the dark at you. Actually, two stocks. Want to pull up Heritage Foods and Aditya Vision. Can we pull up both of those stocks first before I go to Sudeep? Heritage Foods is up 8% today. If you pull up this week's chart, you will see Heritage Foods was up 6-7% in trade yesterday as well. So big move there for that stock. That's part one. Can we pull up this week's chart of Heritage Food? and you will see that uptick that we've seen there, the 2 days on a trot. Then the other one, Aditya Vision. I don't know if Aditya Vision is up today also, I don't know. But I think yesterday, if I'm not wrong, Muralidhar Swaminathan was telling me that it was up. In today's session, flattish, not that great. Okay, so maybe Heritage Foods is the only one. Sudeep, can you pull up the charts and tell me how does it look?
See, Heritage Food, if you see, it has given a multi-year breakout now above 405, 415 levels. And yesterday's move backed by a strong opening today, another 10%. I feel whatever political linkage the stock would have, this at least in the last 2.5 months, there has been a structural uptrend here. So it's just not that the breakout has come today and it has crossed its multi-year highs. But in the last 1.5 to 2 months, if you see the trend in the short to medium term from that perspective also, yes, that stock has started to do well since March 2023. So the moves have started back 2 months back, and I feel from the current levels also this could continue. If someone is holding this from lower levels, one should keep holding this with 450 as a trailing stop loss, and on the upside 565, 590 levels could be visible in the next coming few weeks.
Sudeep, what would you do with Bharat Dynamics, Mazagon Dock, Cochin Shipyard? Stay away. All of them beaten badly today as well. Is there any point at which you'd want to start accumulating?
See, for example, if you see Mazagon Dock 2250, 2300 was a good level above which it had seen a breakout. So let it dip to that level, 2200, 2250 levels. And the numbers, the results of these counters in the last 3 to 4 quarters have been really good. And they have a strong order book also. So it's just that these 15 days, once these 15 days pass by and you get a sense of what ministries are going to home and how the process or how the execution will happen in the next 6 months, what is the 100-day plan. So I guess a lot of nerves will get settled there and you'll see this stock coming back. But it's 15-20 days, like we have shared earlier also, that one needs to just let this volatility pass on. And all these are good names. Now, at 2800 in case of Mazagon Dock or Cochin Shipyard or BDL, which were up 30-40% in the last few sessions, at that time there were buyers, and at this level also on dips, if someone has a long-term view from a defense perspective, then these are very good prices to enter. But one should add this on a dip in a staggered manner.
Okay, Sudeep, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Really appreciate your time. Time for a short break. On the other side, we'll get a big market voice. Sunil Singhania of Abacus Asset Managers joins in to talk about his thoughts on how he thinks about the current landscape.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
Well, back with India Market Open, and it's just good to talk to large money managers about how they are thinking about their portfolios in a scenario like this. What is the rebalancing, if any, that a Sunil Singhania is thinking of? Let's get him on the show to talk about that and more. Sunil, so good having you. Thank you so much for taking the time out. Really appreciate this. Good morning.
Good morning.
And Sunil, just trying to think, I mean, does this, I mean, yesterday PM Modi came out and said that there is a coalition government happening, the two allies have confirmed, so on and so forth, and they will continue with the policies. He mentioned defense as well. For you, is it a dramatic change in the way policies will be done and conducted, and therefore would portfolios need to be rebalanced? Or is the proof still waiting and not clear as yet?
So obviously, Neeraj, life is all about expectations and reality. I would say last week, the markets would have been happy with the 300 to 325 seat NDA mandate with BJP crossing 270. I think we are just around 10% lower, both in terms of the BJP as well as the NDA seat share. However, the overnight exit polls raised expectations phenomenally, and what we saw on Monday obviously led to what we saw yesterday, which was a sharp correction. Actually, as we speak, the markets have stabilized in the morning. We are up like 1%. So from Friday's low to today, we are down like 2%. But the mood in the market is as if, we have lost like 50%. Obviously, the outcome was not what the markets would have loved. But, I think it's going to be a coalition, yes, but it's going to be a strong coalition. And if you go back in history, except since 2014, where one single party had a majority, India has, as an economy and political system, lived with a coalition government. In fact, 1999, the Vajpayee-led BJP government, BJP only had 182 seats. And the pre-poll alliance actually ended up with less than 272 seats. And it was only later on, post-poll alliance with TDP that allowed, the government to have a majority. And that government lasted 5 years. And those were the 5 years where maximum reforms, including divestment, privatization, telecom, and so many things happened. So I think it's a lot of conjecture at this point of time. I don't know how things will pan out. Mr. Modi yesterday clearly reiterated that they will continue with the reform process. So I think let's see, I think the next couple of days, let the market stabilize. The fall is going to be more in stocks which went up significantly far beyond their fair value. And I think those stocks will continue to have choppy days ahead. But by and large, choppiness built in, I think markets should stabilize.
And Sunil, sorry, hence my question. Would you feel the need to do the rebalancing of the portfolio at this stage, or will it wait maybe till the budget or otherwise?
So Neeraj, after price movements, you always feel that I should have done that.
Yeah, sure.
But the only good thing is you are very fundamental focused. So everyone feels a pain when the market falls, good, bad, ugly, everything falls. And, I will not shy in saying that our portfolios would have also taken a hit. But the good thing is that we are very fundamental focused. And therefore, any uptake, we are very sure that the portfolios will react upwards. Yes, we have been sitting last night and even today morning. There is a little bit of tweaking which we might do. But by and large, we have a very diversified portfolio. And despite what was happening on IT, we stuck with our 8-10% weightage in IT. We stuck with our 7-8% weightage in pharma. I think consumption is the only sector where we don't have significant weightage. And maybe with all this happening, both in terms of technical factors where consumption stocks might do well, as also the fact that with good monsoons and a little bit of focus more on the rural side, consumptions might pick up. Maybe that is one segment where we might have a closer look.
Sunil, hi, good morning. Tamanna here, and I would love to have been a fly on the wall on those retweaking meetings that you've been having. But just to take forward one point on what the market's concerns were and now what they could be. So part one was, do we have an NDA third term? That seems to have cleared up. Do we have a Modi 3.0? That seems to have cleared up. Now the question is whether you would see policies tilting more towards populism or not. Is that really a big concern from your point of view?
So Tamanna, unfortunately, I am growing old and I've been in the market for 30 years. And over 30 years, irrespective of which government has been at the center, we have moved ahead as an economy. Yes, if you have a very, very strong leadership, you might end up growing 0.5% faster. But that is not to say that, this time that will not happen. So as you rightly said, I think the two main important points are whether there will be an NDA government and whether there will be a Modi 3.0. I think 99.9% that seems to be clear. In politics, you never say 100% because you never know what googly comes up when, but 99.9% that seems to be a clear thing. It is not that the government is focused on development. It's the people who want development. I think you can't wish away from the fact that people want good trains, they want to fly, they want good roads, they want water, they want electricity. And I think irrespective of which government comes in, I think they will have to do what the people want. And the other interesting aspect of this election, it's not that rural has voted for one block and urban has voted for another block. It has been more regional. The 3-4 states, Maharashtra for its own political reason, Uttar Pradesh, which was a little bit of a shock, and Bengal, which always has an affinity towards Mamata and a party. Other than that, I think by and large results have been maybe better than what was expected. So all in all, it's fine. I think there is work to be done by this government. And frankly, at least I'm an optimist and I believe what happens for good. Maybe, there will be a little bit more focus on hearing the voice of the people going forward.
Right, yeah. I mean, at the end of the day, it's the democratic process that wins every time that there is a free and fair election at our scale. Just very quickly, Mr. Singhania, the kind of fervor about a certain segment of stocks, which are policy-facing stocks, railways, PSUs, defense, etc., would you cool off on them for a bit?
So luckily for now and unluckily over the last 6 months, we have had very little exposure in defense, particularly the shipyards and the PSU defense companies, because as I said, we are a little bit valuation focused and the valuations did not allow us to invest in them. And frankly, even after yesterday's sharp fall, we still are not very excited because the valuations are still significantly higher. So I don't think it's about the segment. I think all these segments have great potential, whether it's railways or defense. I think now we are used to traveling in good trains. You will be traveling in good trains, irrespective of whether, the NDA has 325 seats or 295, they will focus on that. Or whether even in future, some other government comes, they'll have to focus on that. It's all about valuation. So unless the valuations come to reasonable levels, I don't think there is going to be too much of interest in these segments. But as I said, yes, I think there will be some companies, some stocks which might give an opportunity. It was getting tough last 3-6 months to buy stocks, particularly for a little bit of valuation focused investors like us. Maybe this correction is going to give that opportunity. So, I always like to see the silver lining in any adversity. And, our investors are sitting on a lot of cash. We also have cash. Maybe this would be the time where we get an opportunity. Our 5-year view on the country remains as positive as ever. This 3.7 is going to 7 trillion. Maybe instead of 7, it might take 8 years, but the direction is very, very clear. And I'm very sure there are a lot of long-term foreign investors also who are looking at this opportunity, because everyone was waiting for some reason of markets to cool off. And maybe this might be that reason.
Right. Sunil Murli here. One question for the immediate context is, we are all focusing on how FIs are coming in, they are selling, sometimes they come back and invest. But the most important engine or the most important pillar for our markets have been domestic mutual fund investors. Do you think mutual fund investors, will get shaken by this? Do you see any redemption happening there? Because that's going to be a very important cushioning against any selling that's coming from FIIs.
So Murli, if you take Nifty, since Friday, we are down 2%. Year to date, we are up 1%. Funds, even after yesterday's massacre of between 5 to 8% of NAV, maybe some funds fell 10%. We are still 5, 6, 7, 8, 10% up year to date. So I think if you are an investor who's satisfied with, mid-teen kind of returns, even this year has been great year, So I don't see any reason why this 2-3% move is going to shake off the market. I think what might shake off the market, unfortunately, if it happens, which I don't think it's a probability, is the markets fall another 10-15% from here. But that is not what we believe in. I don't think we are looking at that kind of a scenario. I think maximum 2-3% from here, unless there is no NDA government, which again, as I said, is like a 12 sigma event, not a 6 sigma event. So I don't think that is going to happen. Maybe temporarily it might slow down a little bit. But investors are mature, investors are smart, investors have reaped the benefits of keeping on investing in every adversity. And this is going to be no different. And if you actually see last 5-6 years, this 2-3% move has happened 20 times. In fact, in COVID, we had a 30% drawdown. In Russia-Ukraine thing, we had almost a 15% drawdown. When Credit Suisse event happened early last year, we had almost a 15% drawdown. And this 3, 4, 5% drawdowns keep on happening, including this March, when mid and small cap fell in a month like 10-12%. So, investors are used to this volatility, and they've realized that it doesn't make sense to do anything drastic on this 2-3% fall.
Right. So your message to the retail investors would be what? Don't panic, continue to invest, add more, increase your SIP.
What I would suggest, you all should flash and show the investors that from Friday to today, we are down only 2%.
Yeah.
I think that point is being missed because of what happened on one Monday when the markets went crazily high. I think yesterday's fall, you should remove Monday and Tuesday from your charts and then see, 22,500 was the closing on Nifty as of Friday. Today we are 22,000. So what, 500 points happen at any sneeze here and there,
Yeah, that's a great point, Sunil.
But you also showcase that, I think a lot of scare is being created.
Yeah, no, so to Neeraj's credit, that's the first thing he said when markets open. But no, point taken, absolutely. It also is showing you how emotionally the market responds. Now, the question for retail investors and long-term investors is, should you get nervous when you have such kind of peaks and troughs? Or should you just, take a chill pill on those days and look at your long-term view? Because these are also opportunities, right? Today, after the kind of hit yesterday, an astute investor is looking at this market and saying, okay, I believe in the India story. I have a long-term focus. What should I do?
So, Tamanna, 2-3 things. One is God has made us emotional. So, we can't wish away with that. We will remain emotional. And markets are not only about fundamentals, they are also about sentiments and how you control your sentiments. So that is very, very obvious and very logic. The second thing is you don't expect to make returns every single day. There will always be times, I always say this, markets are like cardiogram. They are up and down, and that's why they're alive. You don't want a flatline markets. Otherwise, all of you and us will be out of business. The third thing is, there is no need to jump in immediately. I think I would suggest that please don't jump in and buy something just because the price has fallen 15-20%, because then you will get into the weaker stocks. The reason why those stocks have fallen 15-20% is there is some fundamental reason to it, apart from the news which has triggered that reason. So I would say that 1-2 days, just spend your time, watching TV, reading, trying to analyze what is happening. Nothing is going to happen in the next 3-4 days. I don't see the markets moving majorly either side unless there is shock event, So I think it's a time to just take a chill, get a little bit of, take a back seat, go through your portfolio, see where there can be mistakes which you have made and try to correct those mistakes rather than get into new mistakes.
Yeah, you're right. I think we can take a chill, and rains have reached Mumbai, so the heat wave is off. My next question, and this is slightly forward-looking, and it's to do with the fundamentals of the economy. There are multiple things which are in favor of our economy. GDP growth has been a stunning 7.8% for the fourth quarter. You had S&P coming in and raising our outlook to positive, and the RBI bonanza. So 3 factors working in our favor. But are you worried that in the new political combination that will emerge, the fiscal glide path, that's going to be key for any rating upgrade from a rating agency? Do you think that could be a concern, and therefore we should worry about that part?
We are speculating too much too soon.
Right.
One is we are presuming that there is going to be populism to the extent that our fiscal deficit will be impacted. I don't know, maybe there will be a little bit of populism, but the good thing is that everything fundamentally and on the macroeconomic side is working perfectly for us. We have crude which has come down to $77. That gives us enough room. We have great tax collections, 18-19%. RBI has recently given one of the highest dividends to the government. So there is this 1 lakh crore additional which the government has in it. Tax compliance is increasing. I think all sorts of subsidies are reducing, and I don't think people now want everything free. They want sustainability of what they are getting. So maybe I don't know. Fiscal deficit might lead a little bit of I would say cutting in some other place to be maintained, and that also is again just a speculation. I frankly am not in that camp. But I think otherwise everything which you talked about is working well. You mentioned about monsoon. We are projected to have normal monsoon. World is stabilizing. Crude is down. GDP growth came at 8%. GST tax collection were up like 10-11%. I think what else do you want?
Well, continuity, stability, and return to sanity, I think, would be the top three. If people were making a list of what else do you want.
Every year, if you are expecting 40-50% return, then you are living in a fantasy land.
Yeah.
I think you have to have periods where markets are going to be a little bit choppy. It's fine. That's the nature of the market, and I think that is basically this period, and it also gives investors a little bit of I would say patience and maneuvering to buy some stocks. Otherwise, investing was becoming so difficult. It was such a momentum market. Stocks were just flying through the roof. I think that is a reality check which was needed, and there was some reason which was needed, and maybe this was the reason which is giving the market a little bit of a reality check.
Yeah, reality check is the key word of the day. Thank you so much, Sunil Singhania. Absolute pleasure speaking with you. That's an excellent, sort of very concise and clear point of view. But, the last question that we asked Sunil Singhania about what happens to fiscal deficit, welfare politics, etc., is something we're taking forward with Arudeep Nandi, India economist and executive director at Nomura India. Arudeep, hi. Great to speak with you. Tamanna here. And, this is a very important conversation because that NDA is coming back, but the BJP is being looked at slightly hampered politically compared to before. So you have now two chief ministers who have a big voice as well in what happens in the NDA, Chandrababu Naidu and Nitish Kumar, who have been popular leaders or come back to power in the case of Chandrababu Naidu on the back of a lot of promises to the electorate. So that is question number one. Do you see a comeback of welfare politics / populist politics? Because what you call it depends on which way you see it.
Well, look, I think it's too early at this stage, right? Because a lot of things are sort of falling in place as we speak. I think it'd be really interesting to watch exactly what you're speaking about, which is the political parlays that take place over the next few days in terms of what's on offer, who's on which camp, etc., etc. I think in terms of policies and in terms of whether there's be a fiscal cost to it, I think one, the BJP would have to do some soul searching into what's behind this result. And if there are issues like unemployment and inflation, which by the way had come up in opinion polls before the elections, and if there's need to course correct there. But having said that, our baseline view is that there's not going to be a massive sort of diversion away from macro prudence that we have currently. Growth with macro stability has been a consistent mantra of the government, and it has paid dividends. We've had S&P change its outlook to positive for India. A big part of that is because India's fiscal glide path is sort of more credible now than it was in a long time. So all of that, I think, comes on the back of very sound policy making. So I don't think that there will be a complete reversal of that. What could happen possibly is a rejig of the RevX versus CapEx. So the government may choose to keep CapEx as a ratio of GDP where it is, and then focus a bit more on RevX. But again, I think a lot of those details will come up as the budget comes up. But as of now, our baseline case is that macro prudence still remains at the forefront.
Okay, no, so Oradeep, I get your point that it will take some time. I'm just wondering what this welfare politics even looks like, because the core scheme of free rations of 5 kgs, which is to 80 crore people plus, has already been promised to be extended for the next 5 years. You're already, giving a payment every month to farmers. So what else can be added on this?
I mean, the question that needs to be asked is not how you pile on, handouts, but more of where is it that that voters are discontent, right? And how do you address those issues? So, for instance, if one of the issues is unemployment, right, then giving an additional kilo of rice will not solve that paradigm, right? So, or if it is, say, as they keep saying, mehengai, right? So if it's a cost of living crisis, then it's not enough to just sort of give another handout and be done with it. So I think if there has to be a way to address it, I don't think it will be as simple as let's announce a scheme. And also, by the way, the free food scheme that you spoke of, we've been having Food Security Act for a very long time, even before this. Earlier, they would be charged around 1 rupee, 2 rupee, etc. for these wheat and rice per kilo. It's only that which has been waived off. Indians are still getting the same quota of 5 kg as they got before the pandemic. So I don't think populism has sort of dramatically increased. We've kept the line there. And I think in terms of the political side of it, I would be very surprised if the answer to this is, something as blatant as just announcing more handouts. I mean, one of the things we flagged in our note last night is, there could be, for instance, a lot of resentment maybe against the Agniveer scheme. So kind of relooking at some of the policies, seeing if they are indeed delivering on the ground. You need more such policies to deliver the outcomes. I think the outcome is more important than just the policy announcement in New Delhi. And I think that's where the focus is likely to be.
Aradeep, you made a very important point about just not increasing a kilo or two of free food. This ties up with what the Prime Minister said in his pre-election interview to us. He said that welfare schemes will be the focus, poverty eradication will be the focus, but we will do it through asset creating model. Now, how does that work? Is it possible to have welfare schemes which will create assets?
I think the way, my sense is that the government has a vision of sort of increasing growth and then that growth resulting in dividends on the ground, and then supporting this growth narrative with support with sort of handouts or supports wherever it's needed, like a fill in the blank thing. So if it's, for instance, affordable housing, you give some support, some subsidy, which is very targeted and kind of just achieves a part of a larger vision, right? So I think the main plank of the government still remains delivering growth. And I think the challenge which the government has is making that growth as inclusive as possible. I mean, you were mentioning with the previous guest how India's growth is strong, which is the case. But it's also happening in sectors, say, like financial, real estate, professional services, where, it could be contributing a lot to the headline growth, but ends up employing much lesser people. So I think the focus will be on getting factor-side reforms. In fact, I mean, I'm pretty enthused by the 125 or the 100-day agenda sort of things that are coming up in the media because it seems that the new government is likely to be focused on things like digitalization of land records, of judicial records. They're talking of new urban cities, new urban centers. If I'm not mistaken, 100 billion rupees budget for that. They're talking of things that of making India EV hub, on auto hub, which is actually the right way to think about distributing growth across the population. So I think that still remains the major plank of the government, and any other welfareism or howsoever you put it will be sort of a way to complement this package.
Just one question, Oradeep. Neeraj here, good morning. And that is the deviation from what could have been in an absolute majority, an X amount laid out for capex, which might have to be divvied up a little bit between capex and maybe some welfare schemes, right? Because the pot is limited. Does that lower the allure of the multiplier effect that a spend on capex / infrastructure brings to the table in the next 5 years?
Look, I don't think it's going to be as clinical as that, right? And first, because I think this is a slightly premature discussion because we don't know what the priorities of the new government are going to be. That is something that we will discover in the course of the next month or so. We also don't know if there's going to be some reflationary policies coming up because of this. And I don't think, again, our core view is that it's not likely to be something like, here, take another additional kilo of rice. And, where will we get that from? Okay, let's build one less road. I don't think it'll be as simple as that. I think India's public capex push is supporting growth as of now. It's a very important component of the growth story. So I don't think that's going to be just diluted away. At max, it might be kept at the same ratio as a proportion of GDP. I think in terms of the fiscal side, because a lot of this seems to be around the number, there are three things that have happened on the fiscal side that's actually a positive for the fiscal hawks. One is the obvious, which is RBI dividends going to the government. The extra amount that the government now has to play with is around 0.4% of GDP. The other thing that may have slipped through the radar is that the FY24 fiscal deficit, which was at 5.8% of GDP as of revised estimates, has actually come down to 5.6% of GDP. So there's you already have a 0.4% of GDP extra to play with from the RBI. You have a 0.2% of GDP also in terms of a lower starting point than you previously had. And then S&P's kind of direction of an upgrade clearly says that they're looking at a medium-term fiscal path of 7% of GDP consolidated for center and state, which if you back calculate would mean 4% of GDP in the medium term for the center. Now, the center's current medium-term fiscal consolidation is FY26 at 4.5% of GDP. So 5.6, we have 5.1 now, and 4.5% of GDP in FY26. In fact, Finance Minister Nirmala Sitharaman in the interim budget had said that she might even, India might even cross 4.5% in FY26. So then the question that comes is, what is the new, so to speak, fiscal glide path that is going to happen beyond FY26? And I don't think that that's going to be heavily compromised away. I think it might take a bit longer than has been this rapid pace of consolidation we've seen so far. So that might take over a longer process, but I think fiscal consolidation will still happen.
Yeah, no question marks on that. The only question was whether there is a deviation from what is, and of course it's a premature discussion. It's a bit of a hypothesis, but that's what we do on a day after the results any which ways. But Oradeep, fantastic talking to you today. Thank you for your time, and maybe post the budget, we should try and have another conversation on these thoughts as well.
Absolutely.
Thanks for your time today.
Thanks a lot.
Well, that's the Nomura view, and a packed half an hour. Sunil Singh and I talking about the equities and rebalancing. Oradeep Nandi talking about the presumed welfare and the impact thereof. But don't go away, because while we wrap up India Markets Open from Murli, Tamanna and me, thanks so much for tuning in. On India decides continuing ahead, we have the private equity view. Two of the best private equity voices join in to talk about their view on what is the election impact on private market investing. Stay tuned.
Some people say, hey, you know what?
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are
Hello and welcome. You're watching India Decides 2024. While we all know it's been tough for the public markets, of course, in trade yesterday and today, but let's get some perspective on what this means for private markets with the election outcome that we saw. Joining us today are two stalwarts of the industry, Rahul Besen of Barings Private Equity Partners India and Manish Kejriwal of Kedara Capital. Thank you, gentlemen, for joining us this morning. Manish, I know it's really late at night for you in New York, but thanks a ton for taking the time out. I'll start with you, Manish. You've, of course, been tracking very closely what's happened over the last 48 hours back home. How will capital deployment in India change now in light of the recent developments on the political front? Does the investment horizon go through a considerable change in the next couple of years with the changes on politics, policy? There is any anticipation on that?
Samina, thanks for having us. Pleasure to be here. All I would say is, unlike most other people on your show, I think Rahul and I are probably a more long-term oriented. So I don't think many of our plans have changed overnight, given the results of the election. And let me just emphasize, I think the election is a huge, huge win for Indian democracy. The fact, irrespective of whatever results come out, I think the fact that you chose who you did in Maharashtra and Kashmir, the people got their point of view. Of course, there are lots of good news for the markets with the continuity of the government. But, there's also going to be some weaknesses. However, I want to reemphasize that as private equity, we have a much longer focus, right? It's more a 5 or a 10-year focus. And I would say the only thing that changes in the short term, I would have said if the exit polls were right, we as investors would have spent maybe 60 to 70% of our time driving exits this year and a shorter amount of time given the higher valuations doing new investments. So I'd say 60, 70% exits, 20, 30% with doing investments. I think given what the final result will be and assuming the NDA forms the government with the current leadership at the helm, I would say the valuations which have been corrected, and there could be future corrections, we will probably spend as much time looking at new opportunities given a corrected valuation environment. There's already a lot of capital and dry powder waiting on the sidelines, but I think many of us have decided to go a little slow in terms of fresh deployment given where the valuations were. If the valuations, which are corrected, correct further, you'll see greater activity in the deal flow.
Fair point, Manish. And Manish, I'll pick up from what Manish said. And he said, while the long-term outlook, and this is also what Bain has said, on India continues to remain very strong, where do you see deal activity in 2024? Do we go back to the kind of levels of deal activity we've seen in 2021, 2022? Of course, the context now is a potential change in policy continuity in that sense, geopolitical risk, which is more global in nature, elevated interest rates, and of course, a general uncertainty and sluggish GDP growth, at least outside India. What do you feel 2024 is going to look like in terms of deal activity?
I think that, like Manish said, we are fairly long-term investors. So most of what happens on a day-to-day basis actually doesn't impact our decision-making too much. Now, will it make any impact? Will it make any change? I'm not sure. I think the only real concern I would have is that if, because of coalition politics, there is an imperative to stray from the path of fiscal consolidation, which the government has embarked upon, I think that might be a concern or a worry. I also think that if there is any lack of decision making or the focus on Make in India getting diluted in some way, I think again that would be a bit of a concern from a longer term structural perspective. Will it impact our exits or our entry into particular transactions in the next 12 months? I really doubt it. I think the real issue is that, look, our industry, like all other industries, have a degree of cyclicality. And I think that whenever valuations become stretched or high, and I think that they have been in the market, I think one of the reasons why you saw such a sharp sell-off yesterday was I think the markets have been quite pricey. So if you look at ratios of market cap to GDP, etc., we are amongst the highest in the world. If you look at things like cyclically adjusted PE ratios, again we are almost 2 standard deviations above the norm. Maybe the large caps are not that much, but the mid caps definitely, we are way in excess of the norms. And I think that we tend to stray more towards the mid-cap end of the market in terms of the deals that we do. And I think that therefore, opportunities have been a little bit more pricey. The other thing that one mustn't forget is there are challenges in various parts of the world. Therefore, money to emerging markets is likely to be spotty or even reduce. We are roughly a fifth of the private equity market of Asia Pacific. But if the entire Asia Pacific pool were to reduce, we would see consequences of that too. The only other thing is that probably the impact will be dampened because there's a lot more of domestic capital flowing into this asset class now than there has ever been. So again, all in all, I would say it's business as usual. I think with minor tweaks and turns, I think that, maybe there was a possibility and an expectation that there would be a lot of deal flow because of divestments taking place. I'm not quite sure whether that would hold anymore under the current circumstances. The focus on sustainability, circular economy, these kinds of things which the government was taking, I hope these things don't get diluted because again, that also affords a big opportunity for us. And it's probably, very great, good initiatives from the country's point of view.
Rahul, such good points made there, right? We'll of course discuss investee companies in more detail when we speak to you. But Manish, just before we go into that, let's talk about fundraising. You're in New York as we speak. What are investors saying? FIs have shunned the public markets for the last couple of months, citing that India is expensive, there is a China that's available cheaper, and of course, the pool of money in that sense is limited when you're talking about emerging markets. You've had a very successful fundraise. What is the sense you get or got from foreign investors looking at private investing in India?
Samina, I'll be serious on this one. It is a serious topic. I think people had assumed that given what was going on geopolitically in Asia, that the money that was not going to China would flow automatically to India. I can emphatically say that is not the case. That's not the case today. It wasn't the case over the last 12 months. It wasn't the case over the last 6 months when we did a fundraise. Essentially, the money that was going to China obviously has slowed down, but that money from a risk-reward perspective has mostly gone back to the US. A bit of that money will flow into Japan and in India in that order, and that we're seeing that. I think where you're referring to and what Rahul referred to earlier is the funds that have already been raised, not by firms like ours, which are India dedicated, but the Pan-Asian funds, the Blackstone Asia, KKR Asia, the funds that were already raised now have to refocus and swing towards Japan and India. So in terms of money that has been raised already dedicated to the Asia pot, you'll see some of that resulting in greater deal activity in both India and Japan. However, new money to raise, as we've said earlier, 2-3 big complications. Whenever there are issues like Taiwan, like Ukraine and Russia, like what's going on in the Middle East, there is a bit of a flight to safety. The largest market has always been the US. We've seen that in India much more in a pronounced way in the public markets, where the domestic investors through SIPs and others have more or less taken over the role of what FPIs used to do. I think that's a secular change. And I think as a country, we should be sort of thankful for that, given the increased equity participation. I think that can only increase. Right now, it's the retail investor rushing in. Eventually, and I don't know how many years it'll take, but as Indian pensions, the 401k equivalent in the US will soon start switching towards, to some degree, to equities and to alternatives. So I see a significant inflow of domestic capital. Having said that, the majority of the capital that we raised as Kadara was global capital. And there I would say there's only 1 or 2 things that people focus on. It's purely past performance, the quality of your team, and your reputation, right? So it's being able to portray yourself as truly a caretaker of someone's capital, ensuring the highest returns from a risk-reward perspective, and making sure that your ethos and beliefs shine off very high levels of governance, and you almost play with the moniker that bad news first, right? You're always transparent to your LPs and investors. So I think, to Rahul's earlier point, the global inflows in India have been a challenge for many reasons. I think the best thing that's happened in the last 5 or 6 years in our industry is DPI or returns. We finally have returns going back to our LPs. There's been lots of exits.
Right.
That has created a subtle inflow that will grow over time. But again, to our point earlier, the election results per se don't really change anything, at least where we are expecting it to be right now.
Right.
Obviously, there'll be a bit of a worry on fiscal prudence and deficit management should there be special demands made by different parts of different geographical states. I'll stop there.
Yeah, but even if that doesn't happen, there will be some questions. And what we'll do is some questions on that, not on the fisc necessarily, but some ramifications around change in sectors maybe. We'll take that question at the other side of this very quick break. Stay on, gentlemen. Thanks for that overview. Just take some specifics on the other side of this break.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point. Back with this broadcast in conversation with Rahul Bhasin and Manish Kejriwal. And Rahul, my question is to you. Ahead of the event, was there a zeal to invest into private opportunities in pockets which are very, very strong on the public markets, defense, let's say capex beneficiaries, etc.? Was there a zeal to invest in the private markets too at those heady valuations? And does this change that narrative? Because the purse is limited, and if the government has to do some bit of welfare spending in order to attract the rural vote, it might go off the total spends that might have been dedicated for capex earlier. If that happens, we don't know that. But therefore, does it bring some other sectors into the fray, into the reckoning, or not quite?
Look, for us, not so much, because to start with, a generic sort of principle of investing is you don't like to invest too much in businesses which have very significant buyer concentration. And industries like defense, etc., have this disadvantage of, having predominantly one buyer, and that's the government. And I think that's, to my mind, industries which sell into the government have tended to be challenged in terms of generating good returns for investors over any structural, over any reasonable period of time. I think if there are some structural changes in, I think, greater accountability and bureaucratic reform which comes into the country, I think those sectors will become much more attractive. But there is high growth there, and therefore one will look at things like that. But I think there is also quite a bit of risk. So I think the bar to make those kinds of investments tends to be high in any case. As far as other sectors are concerned, look, I don't think private equity rushes into things and sort of tries to chase the flavor of the season. I think that's classical momentum investing, which is well suited much more liquid asset classes. Our business, Manish and I are sort of at slightly different ends of the spectrum, but essentially what we do is we try and see where the world is going to go, which are the kind of companies which can take it there, and try and partner with them and help facilitate getting to that place. And that helps you have supernormal growth, which is what generates returns for us. I don't think any of those things will change. I don't think any of the trends as far as technology, disruption, etc. are going to change. And those have been very considerable if you think about it the last, ever since the global financial crisis and with the zero cost of capital, all of that has been very, very substantial. Now, in that situation, there are lots of opportunities. There were yesterday, there are today, there will be tomorrow. I think one of the big challenges to my mind is the fact that a lot of our capital, which comes internationally, I think the big issue is the fact that their own debt to GDPs are high. The ability of some of the countries, including America, to finance its own fiscal deficit is high. And whether we like it or not, the American risk-free rate is the risk-free rate around the world. And if you struggle to refinance your own treasury bills there, they are doing it with short-term capital. I think that that might end up raising risk-free rate for all asset classes around the world. And I don't think India will be exempt from it. And I think that, to my mind, would be the single biggest challenge across asset classes, not just ours.
Okay. Yeah. So, and it's open. The jury's out there about how long does it stay that high. And of course, but yeah, Rahul, your point is well taken that maybe there are other factors barring this election verdict which probably has a bigger impact. But I'm still inclined, Manish, to ask you this as well. Rahul mentioned no quite changes. You're looking at companies which are taking the world ahead, etc. Are you saying, Manish, for example, that you are not you haven't looked at policy-linked sectors at all in the last 4 or 5 years, and therefore, if you haven't, then it's a separate thing. If you have, does that narrative change at all or no? I understand. I got the broader picture. Just trying to understand and trying to tell our viewers whether this verdict has an impact or no on private markets.
And then basically where we are is not very different from Rahul laid out. Private equity is very much a bottoms-up driven business. It's the buyer concentration truly worries us also, as Rahul mentioned. But it's not that the election or even a budget every year makes you change your direction. Typically, all of us invest broadly in 4 or 5 different sectors. Within that, people have different concentration. We have been very successful in the whole financial services and consumer play, both direct consumer plays such as retail, where we've done it, or indirect retail plays such as packaging. I think when you understand sectors like this very well and you identify the drivers of success, who the winners and losers might be, you don't go around and changing that opportunistically in the short term. It is true in the last 3 or 4 years, and we also tend to shy away from those businesses which are heavily regulated or which have a high degree of government involvement, just because there are many other players out there, maybe not in private equity, who would have a much bigger competitive advantage. So we would rather shy away from those businesses which need a degree of influence in Delhi or otherwise, and remain bottoms up. I think that focus, really knowing the sector better than most others, is why investors give you the capital and you focus on what you know well. Right. So I would say the momentum part of this swinging is something we try to avoid, remain long-term focused. And in times like this is even more when you return to your basics, you sort of go back to your list of wishful, these are the 8 or 10 companies we really liked. Maybe 5 of them were out of the zone because of valuation reasons. And you try to make a new play, a new value proposition. Given the broader environment, the pressures, will these come down, even in the private markets, to levels that you feel comfortable investing behind? It's not to say that in case what the exit polls have suggested, that all of us would go away from consumer, from financial services, from healthcare, from tech and tech services, and suddenly start doing things like defense only.
Rahul, one quick question. While some may have argued that it's been a funding winter for Indian startups, it's been a marquee year for Indian exits. And IPO has been a preferred route given the euphoria we've seen in public markets. Do you feel, Rahul, that sentiment still remains with everything that we've been seeing and talking about and hearing about with Indian equity markets?
See, I've always held that high quality businesses always have buyers, whether in the public markets or private markets. I think if you have a decent business and it has a decent growth trajectory with decent return on capital employed, you'll always find buyers. And I think that that's really not an issue. I think the buoyancy is still very much there in the public markets. I think lots of issues will go through, because if you look at the sum total of capital coming into public markets, and you look at the issuances or the capital being raised out of public markets, I think the flow of capital coming in is still much higher than the aggregate amount of issuances, whether it's from secondary or primary. And as a consequence, I think the public markets will continue to stay well bid, at least for a while. I think, of course, if people overprice their issues, and what tends to happen in situations like this is that a lot of momentum plays get bought into, often by people who don't quite understand them. But that's the nature of human beings, and that's the cycle of greed, and I would call it more than greed, just envy. And then people get burnt, and I think that's a cycle which has repeated itself always in markets and will do so even this time.
Thank you, Rahul. Thank you, Manish. Great getting both your perspectives, and of course explaining to us what it really is for a private sector, private investments, as opposed to the reaction we're seeing across public markets over the last few days. Thank you. Have a good time in New York, and of course, good luck, and we'll hopefully see you soon. With that, we're completely out of time on this edition of India Decides, but stay tuned. There's a lot more programming on the other side. We'll talk to F&O guests to get a sense of what's happening in the derivative market.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
The Union Cabinet led by Prime Minister Modi is set to meet today at 11:30 a.m. All eyes on kingmakers Nitish Kumar and Chandrababu Naidu. And markets still remain volatile post-election results, and Nifty and Sensex trade negative marginally at Nifty around 22,000. Sectors trade mixed. FMCG, auto and pharma lead the gains, while PSU banks, metals and real estate see big cuts. And Hindalco falls once again this morning, down over 4%. We also believe the company's US subsidiary Novelis postpones its $945 million IPO. Hello and welcome. You're watching the FNO show. Now, the next half an hour, we will try and decipher what's happening in the markets. It's a tough trade, nevertheless. But of course, Agam, and we will talk to experts, get a sense of what should traders be thinking or doing, or what they are rather doing.
Yeah, it's a tough one to call, Samina. But of course, at the moment, we are seeing a little bit of a lull, if you can call it that. There is once again a little bit of a divergence as far as the Bank Nifty and the Nifty are concerned. The Nifty advancing by around 0.5%. The Bank Nifty is down by just as much, and even if the volatility index has come off by around 25 odd percent, it's still around the mark of 20, and that always means that we still haven't seen any abatement in fear, and that also has landed up keeping option premiums relatively or broader and larger. Of course, today is also the Bank Nifty weekly options expiry, so I'd reckon that there'll be a little bit more volatility there. Truth be told, in terms of your overall open interest on an absolute basis, we haven't seen too much traction in today's day of trade, at least not in the first 1 hour of 1 hour. And I'd reckon that a lot of traders would want to sit this one out. They possibly want to wait on the sidelines to see how things are panning, because we're still in a very uncertain environment, and even though we have had positive feelers from the NDA at the moment in terms of forming the government, at the moment it does seem like there are the investors are not buying into it just yet. They want to potentially see and wait and watch, and then eventually, perhaps slowly and steadily, take positions on as far as these markets are concerned. As you can see there, the Bank Nifty is still seeing a whopping 12% increase in open interest. The Nifty futures, again, that's also something which will be in focus because the kind of sharp cut that we've seen yesterday. We have seen, a little bit of a gain advance coming through, but there's no change in OI here. And the overall open interest on an absolute basis is around a little less than 300,000, which is not, which is mostly average at the moment. Now, at least as far as your ranges go, where as far as Nifty is concerned, again keeping an eye on something like 22,000, where that's the pin strike at the moment. That's where you have a lot of accumulation and calls and puts. And of course, on the higher end now, we're keeping an eye on 22,500 on an immediate basis. Still, at the moment, it does seem like you potentially could anticipate another 1,000-odd point move over the course of the next 3-4 days, because that's we've done twice as much just in yesterday's day of trade. So you never know how things can pan out, and perhaps that is something that a lot of traders are also factoring in terms of your option premium. So this is how markets stand. Still a bit nervous. The Bank Nifty under pressure right now, and the Nifty in the green, Samina.
The only thing that's getting bought is defensive. So anything in the consumption space is looking okay. IT and pharma seeing buys as well. A quick check on the WIX. I don't know whether Agam did that, but let's do a quick check on how the WIX is looking this morning. Remember, yesterday you'd have expected it to fall on back of the event, but it actually spiked up contrary to that. This morning, it's finally eased below levels of 20, down about 26%. So this could be one sign of a little bit of sanity potentially returning back to the street. Brijesh and Shilpa join in with their trading calls this morning. Shilpa, it would have taken a brave heart to do a trade yesterday, but this morning it seems like there's a calm after the storm, and in a way it may not be such a bad thing that the markets are not seeing a runaway rally. I think it's piecing everything together, consolidating, and then potentially see some moves one way or the other. On the index, would it be wise to initiate a position either on the long or short side, even a covered strategy maybe?
Good morning, everyone. Looking at the market scenario, I wouldn't actually go outrightly in any recommendation as of now, because though this is some sort of bounce back play happening, but we still see Bank Nifty, falling again under immense pressure. where 47,400 to 500 is acting as a very crucial resistance, and for Nifty 22,500. The downside trigger is opening up till 21,000 for Nifty, and Bank Nifty likewise for 45,500. So the possibility of a more downside play is, very much viable. But still, waiting it out for a day or two, I guess, is, more better, because if you also play it for strategy in options, the VIX crashing, and if it again spikes up or something, the VIX play is so uncertain, in fact, that the strategy might not be that fruitful.
All right, Brijesh, what's your stance on the markets at the moment? How are you playing them, or are you playing them at all?
Yeah, hi, morning everyone. So I believe that we are seeing a profit booking and distribution in the market. So definitely the trend is not positive. Somewhere, I also believe that Nifty should be heading somewhere close to 21,000, which is also the 200-day moving average in Nifty cash levels. So directionally, the bias is negative. Since we have fallen so much, there can always be a pullback. 50-day moving average is coming somewhere close to 22,500 mark. So any 200, 300 point bounce should be viewed to at least reduce their long position wherever the people are stuck. Directionally, the trend remains bearish. Maybe it is this volatility, as long as the Nifty VIX doesn't settle below 12-13 level, which may take another couple of days. So I think the volatility will be there, and bounce should be used as an exit opportunity. Wait for the correction somewhere close to 21,000. That should be the level where you need to keep a watch on. Same thing for the Bank Nifty. Today being a Bank Nifty expiry, I think if we see some bounce, since strategy would not be that great, only on a bounce somewhere closer to 47,500 level. If we see those level, maybe next half an hour, 1 hour trade, then I think I would be taking a short trade, because I believe 48,100, which is also the pivot point, that will not be taken out during the day. So if I get an opportunity at 47,500, I would like to take a sell trade. Probably for that again, this 47,000 levels to be broken on the closing basis.
Okay, so hold your thoughts, guys. We need to cut across to TDP Chief Chandrababu Naidu. I believe that we still have a minute before we do. But of course, we're going to have a statement here, and this one becomes crucial because it's all about forming the government. And of course, in terms of what he says is going to be very, very important going in, because of the kind of seats that the TDP holds in the latest general elections. Of course, it will make a huge difference in terms of the contribution and the seat share that they can bring as far as the NDA is concerned and the formation of the government. So overall, of course, we're going to continue to keep an eye. As soon as that conference comes through, we will, of course, cut across.
Okay, but please, yeah. I think if we can cut to that speech, that should be helpful.
రాష్ట్రం నిలబడాలి. దీనికోసం ఎన్ని త్యాగాలైనా సరే చేసి మళ్ళీ భావి తరాల భవిష్యత్తు కోసం ముందుకు పోవాలని చెప్పి వెళ్ళాం. నేను చాలా ఎన్నికలు చూశాం. 10వ ఎన్నిక నిన్న. అంటే ఇన్ని ఎన్నికలు చూసిన, అంటే ఎన్నికలు చూడడమే కాకుండా ఈ ఎన్నికలన్నీ అట్ ది హెల్మ్ ఆఫ్ అఫైర్స్ ఉండి ఎప్పటికప్పుడు సమీక్షలు కానీ ఇవన్నీ నిర్వహించడం కూడా చేశాం. రాజకీయాల్లో ఒడికిదుడుకులు సాధారణంగా ఉంటాయి. ఎవరు శాశ్వతం కాదు. దేశం శాశ్వతం, ప్రజాస్వామ్యం శాశ్వతం, రాజకీయ పార్టీలు శాశ్వతం, అధికారం అశాశ్వతం. రాజకీయ పార్టీలు కూడా సక్రమంగా ఉంటే మళ్ళీ ప్రజలు ఆదరిస్తారు. లేకపోతే రాజకీయ పార్టీలు కూడా చాలా పార్టీలు కనుమరుగైపోయినాయి. వ్యక్తులు కనుమరుగైపోయారు, రాజకీయ పార్టీలు కనుమరుగైపోతాయి. కానీ ఇంత హిస్టారికల్ ఎలక్షన్ నేను ఎప్పుడు చూడలా. నా జీవితంలో చాలా ఎలక్షన్స్ ఫేస్ చేస్తే కానీ వేవ్ కనపడేది, వ్యతిరేకత కనపడేది. కానీ ఈ ఎలక్షన్లో ఎక్కడో అమెరికాలో ఉండే వ్యక్తి ఒక 5 లక్షలు 10 లక్షలు ఖర్చు పెట్టుకొని నేను రావాలి, ఓటేయాలి, రాష్ట్రం నిలబడాలి, ప్రజలు గెలవాలి అనే ఆవేదనతో వచ్చారు. ఎక్కడో పక్క రాష్ట్రాల్లో ఎక్కడో కడుపు నిండడం కోసం కూలి పనులకైనటువంటి వ్యక్తులు, పాచి పనులు చేసుకునే వ్యక్తులు సొంత డబ్బులు పెట్టుకొని నేరుగా ఇక్కడ రైల్వే స్టేషన్లో చూస్తే, బస్ స్టాండ్లో చూస్తే భోజనం కూడా ప్యాక్ చేసుకొని తీసుకొచ్చి ఇక్కడ భోంచేసి ఓటేసే పరిస్థితికి వచ్చారు. ఈ కమిట్మెంట్ని ఏ విధంగా వర్ణించాలో నాకైతే అర్థం కాదు. ఏ విధంగా వాళ్ళని అభినందించాలో కూడా అర్థం కాని పరిస్థితి. అనేక ఎన్నికల్లో అనేక అనుభూతులు చూశాం, కానీ మేము అన్ని ఎన్నికల కంటే ఇది ఒక తెలుగుదేశం పార్టీ చరిత్రలో, ఆంధ్రప్రదేశ్ రాష్ట్ర ప్రజల చరిత్రలో సువర్ణాక్షరాలతో లిఖించదగ్గ ఎన్నిక. ఇది ఒక హిస్టారికల్ ఎన్నిక. ఆగస్టు క్రైసిస్ తర్వాత ఎన్టీ రామారావు గారు పార్టీ పెట్టిన తర్వాత 83లో మేము గెలిచాం. అప్పుడు 200 సీట్లు వచ్చాయి. కొత్తగా పార్టీ పెడతానే ఎన్నికలకు వెళ్ళి 9 నెలలు అధికారంలోకి వస్తే 200 సీట్లు వచ్చాయి.
You can hear Chandrababu Naidu speaking at a press conference. This press conference has been there for a has been waiting for a long time, and we'll keep bringing you what the most important person in the NDA fold who's got a landslide victory not only in Andhra Pradesh but also in the Lok Sabha. We are listening to what Chandrababu Naidu is saying. Let's listen into.
దానికి కారణాలు నేను ఎక్కువ చెప్పక్కర్లేదు, అనుభవించిన ప్రజలకే అర్థమవుతుంది. ఎప్పుడైనా సరే ప్రజాస్వామ్యంలో ప్రాథమిక హక్కు మాట్లాడే స్వేచ్ఛ. ఆ స్వేచ్ఛనే కోల్పోవాల్సి వచ్చింది. అదే కాదు, బ్రతికే స్వేచ్ఛ, ఆస్తులు పెట్టుకునే స్వేచ్ఛ, ఇవన్నీ కోల్పోయే పరిస్థితి వచ్చింది. అందుకే మీరు చూస్తే మొన్న ఎలక్షన్లో సరే ఏ విధంగా మేమందరం కలిసాం అవన్నీ మాకంటే ముందు మీకే తెలుసు. కలిసినప్పుడు ఎవ్రీ ఈవెంట్ ఇవి వేదిక నుంచే ప్రారంభించాం. అక్కడి నుంచి ముందుకెళ్ళాం. ఆ రోజు చెప్పాం, ఈ రోజు ఒకటి చెప్తున్నాం. మా ఆలోచన ప్రజలు గెలవాలి, రాష్ట్రం నిలబడాలి. అంతవరకు సాధించగలిగాం. 55.38%.
The people should win, and we have been able to achieve that.
దీంట్లో తెలుగుదేశానికి 45.60% పడ్డాయి. వైసీపీకి 39.37% పడ్డాయి. ఇది ఊహించినటువంటి ఒక్కొక్కసారి 95,000 మెజారిటీ. ఒకప్పుడు నేను చార్మినార్ ఎగ్జాంపుల్ చెప్పేవాడిని. చార్మినార్ అంటే
the kind of majority we have got is unimaginable.
అక్కడ ఎప్పుడు ఎక్కువ ఓట్లు వచ్చేటివి. ఆ తర్వాత కుప్పం, సిద్దిపేట పోటీ పడేటి రెండో స్థానానికి. అప్పుడు కూడా 70,000, 80,000, 50,000 కాడ ఆగిపోయేవాళ్ళం. ఈసారి 95,000, 94,000, మళ్ళా 92,000, 91,000. మంగళగిరి లాంటి కాన్స్టిట్యున్సీలు 91,000 మెజారిటీ. ఏ విధంగా అభివర్ణించాలో నాకైతే అర్థం కాదనమాట. అంతా ఇది వెళ్ళిపోయినాయి.
I'm in a situation where even I am not understanding that how should I be thanking the people for the kind of majority we have got.
అహంకారం, నియంతృత్వం, విచ్చలవిడితనం, ఏదంటే అది చేస్తాననుకుంటే ప్రజలు క్షమించే పరిస్థితులు లేరు. అదే ఈరోజు నిరూపించే పరిస్థితికి వచ్చారు. ఒక మాటలో చెప్పాలంటే
it has been proven that ego of anybody will not be forgiven by the people.
గుణపాఠం పాలకులకు కాదు, అవినీతి అహంకారంతో ముందుకు పోయి ఎలాంటి ధ్వంసకారులకైనా ఇదే జరుగుతుందని నిరూపించారు ప్రజలు. దానికి మనస్ఫూర్తిగా అభినందిస్తున్నా. అదే సమయంలో 5 సంవత్సరాలు మా కార్యకర్తల పడిన ఇబ్బందులు, చాలామంది స్లీప్లెస్ నైట్స్.
Many of our party workers have spent sleepless nights to achieve what we have got today.
చాలా కడాన మనిషిని హింస పెడుతూ నువ్వు ప్రాణంతో బతకాలంటే జై జగన్ అనమంటే జై తెలుగుదేశం, జై చంద్రబాబుని ప్రాణాలు వదిలిన సందర్భం చంద్రయ్య. ఇది తలుచుకుంటే ఆ కమిట్మెంటే, ఆ త్యాగాల ఫలితమే ఈరోజు ప్రజాస్వామ్యాన్ని కాపాడుకోగలిగాం. మా కార్యకర్తలకే కాదు, మీడియా 5 ఏళ్లు మీరు పడిన ఇబ్బందులు, మీరు కోర్టుల చుట్టూరు తిరిగిన ఇది, మిమ్మల్ని సిబిసిఐడి ఆఫీసులో పెట్టి వేధించిన విధానం,
not just the party workers of Telugu Desam party, but even the media professionals suffered a lot during the 5 years of the previous government.
మేనేజ్మెంట్ని ఒకరినని కాదు, ఎవరినైనా పట్టుకురావచ్చు, ఏదైనా చేయొచ్చు అనే ధీమా వచ్చేసి ఇష్టానుసారంగా ప్రవర్తించే పరిస్థితికి వచ్చారు. అదే సమయంలో ప్రజల మీద, మా పార్టీ మీద సరే, ఈవెన్ జనసేన పవన్ కళ్యాణ్ ఆయనకు కూడా స్వేచ్ఛ లేదు. ఎక్కడైనా సరే విశాఖపట్నానికి వెళితే ఉన్న పళంగా విశాఖపట్నం నుంచి వెకేట్ చేయాలని తిరిగి, అంటే నగర బహిష్కరణ, ఒక నాయకుడిని నగర బహిష్కరణ చేస్తే కారణం చెప్పకుండా ఇంకా వేరే వాళ్ళ కథ ఏముంటుందో మనం ఆలోచించుకోవాల్సిన అవసరం ఉంది. కేసులు పెడితే ఎందుకు పెట్టావు కేసు అని అడిగితే దానికి సమాధానం చెప్పకుండా ముందు నిన్ను అరెస్ట్ చేస్తున్నాం, తర్వాత కేసు డీటెయిల్స్ ఇస్తా ఉంటారు.
People were arrested and not told about the case details in the earlier government.
ఇది మాకేదో అధికారం అని మేము అనుకోవడం లేదు, ఒక బాధ్యత. మేము పాలకులమే కాదు, సేవకులం అని చెప్పి నినాదానికి శ్రీకారం చుట్టారు. ఇవన్నీ గుర్తుపెట్టుకొని పనిచేస్తాం.
We will work and remember that we have been given an opportunity to serve the people of Andhra Pradesh.
అదే మాదిరిగా ప్రజాగళం ఎన్నికల మేనిఫెస్టో ఇచ్చాం. ఇవన్నీ కూడా ప్రజల్లోకి బాగా వెళ్ళాయి.
Our manifesto was well adopted by the people of Andhra Pradesh.
నిన్న వచ్చాయి.
And the result of that was shown yesterday.
ఒక పక్క తెలుగుదేశం పార్టీ మొట్టమొదటిసారిగా పవన్ కళ్యాణ్ గారు ప్రభుత్వ వ్యతిరేక ఓటు చేరడానికి వీలు లేదు, ఈ రాష్ట్రంలో మళ్ళా ప్రజాస్వామ్యాన్ని కానీ ఈ రాష్ట్రాన్ని కాపాడుకోవాల్సిన బాధ్యత ఉందని చెప్పి ముందుకొచ్చి ఈ యొక్క కూటమికి బీజం వేశారు. వారిని మనస్ఫూర్తిగా అభినందిస్తున్నాం. ఆ తర్వాత బీజేపీ కూడా,
I thank Pavan Kalyan for extending his support to the cause we were fighting for.
ముగ్గురం కూడా మీరు ఒక్కసారి ఆలోచిస్తే ఒకరు ఎక్కువ ఒకరు తక్కువ కాకుండా ముగ్గురం కలిసి పనిచేశాం.
All the 3 parties in the alliance work together. No one is above or beneath anybody, and we are working for the betterment of the state.
నిలబడాలి. దీనికోసం పై స్థాయి నుంచి ఢిల్లీ నుంచి వచ్చినటువంటి బీజేపీ నాయకులు కానీ, ప్రధానమంత్రి అమిత్ షా గారు కానీ, ఇక్కడుండే పవన్ కళ్యాణ్ కానీ, తెలుగుదేశం పార్టీ కేంద్ర నాయకత్వం నుంచి కింది వరకు అందరం కూడా ఒక ట్రూ స్పిరిట్తో పనిచేశాం. 175
the top leaders from Delhi or the state leaders of Andhra Pradesh, we work together for the good of people in Andhra Pradesh.
భాగస్వాములుగా ఒక బాధ్యతతో ముందుకు పోయాం. అందుకే ఈ అనూహ్యమైనటువంటి విజయాన్ని సాధించగలిగాం. ఇక్కడి నుంచి బాధ్యత ఉంటుంది. ఆ బాధ్యతని ఏ విధంగా చేయాలనో అవన్నిటి కూడా ప్రణాళికలు తయారు చేసుకుంటాం.
We'll have a great responsibility going forward, and we will make sure that we have a roadmap for it.
ఇది ఒక 30 సంవత్సరాలకు ఎంత డ్యామేజ్ చేయాలనో అంత డ్యామేజ్ జరిగింది. వ్యవస్థలు విధ్వంసమయ్యాయి. మొత్తం ఎకానమీ కుప్పగూలిపోయింది.
The damage was done and the economy suffered a lot during the previous government.
ఏమేం చేశారో తెలియదు. ఇంకొక పక్క ఎక్కడికక్కడ సహజ సంపద, ఒక శాండ్ కావచ్చు, మినరల్ వెల్త్ కావచ్చు, లేకపోతే ఏదంటే అది ఇంకా మాకు అడ్డే లేదు, ఏమైనా చేయగలుగుతాం, ఎవరైనా అడ్డొస్తే తొలగించుకుంటా పోతామనే ధీమాతో ముందుకు పోయారు.
The resources of the state were exploited, and the thought behind this kind of leadership was arrogancy of not counting anyone in front of the leader of themselves.
వ్యవసాయానికి నీళ్లు కూడా కొరత వస్తుంది, పక్కనుండే పొలాల్లో కూడా నీళ్లు ఉండవు, కానీ మాట్లాడే సాహసం చేయలేకపోయాడు.
The farmers suffered with less water in the farms, but nobody dared to raise their voice against the previous government.
ఇవన్నీ చెప్పుకుంటూ పోతే ఒకటి కాదు, చాలా జరిగాయి. అవన్నీ కూడా ఏ విధంగా చేయాలనో చేస్తున్నాయి. మళ్ళీ వ్యవస్థలన్నీ కూడా పునరుద్ధరించాల్సిన బాధ్యత ఉంది.
We have the responsibility of restoring all the resources for the state.
మీరు పేపర్లో రాసినట్టు కానీ మేము మాట్లాడినట్టు కానీ ఒక లెవెల్లో ఆగిపోయినాయని నా ఉద్దేశం. ఎందుకంటే నేను రాజకీయాలు 40 ఏళ్ళు చూశాను. ప్రభుత్వాలను మేము అధికారం ఉన్నప్పుడు చూశాను, బాగు చేసి మళ్ళా అపోజిషన్కి వస్తానే వీళ్ళు నాశనం చేస్తే మళ్ళీ నేను అధికారంలోకి వస్తానే దాన్ని బాగు చేయాలంటే ఎన్ని కష్టాలు ఉన్నాయో నేను చూశాను.
Have been in power for 4 decades and have seen many governments coming and going, and I have seen the highs and lows of Indian politics.
నల్గొండ నుంచి రైతులు తీసుకొచ్చి సమ్మర్ వస్తే అసెంబ్లీ ఏప్రిల్లో ఉంటే గొడవలు సగం టైం మేము కరెంటు కొరత పైనే చర్చించేవాళ్ళం. దట్ వర్ ది డేస్. అలాంటిది నేను 1999 నుంచి పవర్ సెక్టర్ రిఫార్మ్స్ తీసుకొచ్చి 2004కి సర్ప్లస్ బాధ్యతతో క్వాలిటీ పవర్ ఇవ్వడం మొదలుపెట్టాం.
We got the power sector reforms and also started giving many other reforms to the state going ahead in 2004.
కరెంటు కొరత లేకుండా చేసి వ్యవస్థలన్నీ పటిష్టంగా చేసి సోలార్ విండ్ తీసుకొచ్చి కాస్ట్ తగ్గిస్తే ఇప్పుడు మీరు చూశారు ఎంత పవర్ ఛార్జెస్ పెంచారు. 9 సార్లు పెంచారు.
You have seen the power charges increased by 9 times now. What was the need of it?
ఇప్పుడు ఎక్కడుందో దాన్ని ఎత్తుక్కుంటే ఎంత లోతు పోయిందో కూడా తెలియదు. దాన్ని ఏ విధంగా రిపేర్ చేయాలి, ఎంత డబ్బులు తెచ్చారు, ఏ పేరుతో తెచ్చారు, అవన్నీ ఒక వ్యవస్థను కాదు, సంబంధం లేని వ్యవస్థతో డబ్బులు తీసుకొచ్చి సంబంధం లేని డిపార్ట్మెంట్కి ఇచ్చారు.
The money was bought in the name of many departments and it was distributed without any planning by the previous government.
జుబిలియంట్గా బ్రహ్మాండంగా ఉందనుకోవడానికి కాదు, ఒక బాధ్యతతో మా మీద ఎంత నమ్మకం పెట్టుకున్నారో ఈ ప్రజల్ని మళ్ళీ ఒక దారి చూపించే మార్గం మేము చూపిస్తాం.
I acknowledge that the trust of people on us is immense and the responsibility that they have given us is huge.
అవమానానికి నా జీవితంలో ఎప్పుడు బాధపడలా. నా మీద బాంబులతో దాడి చేసినప్పుడు కూడా వీరోచితంగా ఎదుర్కొన్నా. 2003 సెప్టెంబర్ అక్టోబర్ నాకు ఇప్పటికి కూడా జ్ఞాపకం. ఆ రోజు నా మీద బాంబులు చేసినప్పుడు చాలా ఒక పానిక్ రియాక్షన్లో కూడా నేను భయపడలేదు. అలాంటి వ్యక్తిని మీరు చూస్తే అది ఆ సంఘటన చూసిన తర్వాత ఇలాంటి కౌరవ సభలో ఉండడం కరెక్ట్గా దాని అసెంబ్లీలో చెప్పి దానికి కూడా మైక్ ఇవ్వకపోతే చెప్పేసి బయట వచ్చి ప్రెస్ కాన్ఫరెన్స్ చెప్పి అనౌన్స్ చేశాను. మళ్ళీ క్షేత్రస్థాయిలో గెలిచి అసెంబ్లీని గౌరవ సభ చేసి అసెంబ్లీకి ఎంటర్ అవుతానని చెప్పాను. నేను ఏదైతే ఆ రోజు ఒక ప్రతిజ్ఞ చేశానో దాన్ని నిజం చేయడానికి ప్రజలు సహకరించారు. మామూలుగా సహకారం కాదది. నేను ఇన్ని సంవత్సరాలు చాలాసార్లు చాలా ఎలక్షన్లు గెలిచాం, కొన్ని ఎలక్షన్లో ఓడిపోయాం. ఎలక్షన్లో ఓడిపోయినప్పుడు నేను ఎప్పుడూ కుంగిపోలేదు. ఎలక్షన్లో గెలిచిన తర్వాత గంతులేయలేదు. నిబ్బరంగా ఓడిపోయినప్పుడు ఒక బాధ్యత, ప్రతిపక్షంలో ఉండి పనిచేయాలి. గెలిపించినప్పుడు ఒక బాధ్యత.
I fought many elections in last few years and won a few and lost a few. I have never celebrated my victories carelessly.
నేను ఏదైతే చెప్పానో అది చేసి వెళ్ళడం అనేది ఒక తృప్తి, ఒక గౌరవం. ఆ గౌరవాన్ని
It would be a feeling of satisfaction to deliver all my promises that I have made to the people of Andhra Pradesh.
పనిచేస్తాం. మీ ఎక్స్పెక్టేషన్స్ ప్రకారం పనిచేసి అయితే ఎప్పటికప్పుడు మీరందరూ కూడా
our government will work according to the expectations of people of Andhra Pradesh.
ఇంకా మీరు చూసుకోవడానికి కాకుండా ఎప్పటికప్పుడు మమ్మల్ని నడిపించే బాధ్యత, మాకు సహకరించే బాధ్యత, మళ్ళీ రాష్ట్రంలో ఉండే ప్రజలందరం బాగుపడాలంటే ఏం చేయాలో మేము చేసినప్పుడు ఎప్పటికప్పుడు ఫీడ్బ్యాక్ ఇచ్చి నడిపించే బాధ్యత తీసుకోవాల్సిందిగా వారిని కోరుతున్నా.
I request all the people of Andhra Pradesh to take the onus of giving us a feedback of our work during our upcoming tenure.
ఇక్కడికి వచ్చిన అబ్జర్వర్స్ని, ఇక్కడుండే పార్టీ అధ్యక్షురాలైనటువంటి పురంధేశ్వరి గారిని మనస్ఫూర్తిగా అభినందిస్తున్నా. వీళ్ళందరూ కూడా
I thank all the people who are present here today and have been a part of our success.
ఒక కార్యకర్త సిన్సియర్గా పనిచేయడానికి ఏ అభ్యర్థి ఉన్నా తమ అభ్యర్థిగా పాటించి బ్రహ్మాండంగా పనిచేశారు. వాళ్ళందరినీ అభినందిస్తున్నా. ఈరోజు మా విజయం మూడు పార్టీల కార్యకర్తల సమిష్టి కృషి.
This victory of the NDA Alliance is a victory of three parties working together relentlessly for last few years.
మీ అందరికీ అభినందనలు, ధన్యవాదాలు. థ్యాంక్ యూ అనండి. No, don't bother. No, hear me, I say. You are very loud. You want news always. I am also experienced. I have seen so many political changes in this country. We are in NDA. I am going for NDA meeting. In course of time, anything we'll report to you. Thank you.
Okay, so that was very clear. We are in NDA. I'm going for the NDA meeting, and his support to NDA seems to be very, very clear and unequivocal. That was Chandrababu Naidu. My colleague Aditya is here, who's been translating as he was speaking. Viewers would wonder why NDTV Profit cut to Chandrababu Naidu's press conference. He's the most important man in today's politics. What do you say, Aditya?
Yes, exactly. What we have understood from this press conference of Chandrababu Naidu, that he has instilled a faith in Andhra Pradesh once again, that the policies and the cause that was lost earlier will be brought back to people, and people would get all the promises back again that was made in the previous tenure of the Chandrababu Naidu. So this is something to look forward to, that how Chandrababu Naidu and the TDP NDA Alliance take the government forward. But one thing is for sure, that Chandrababu Naidu has confirmed that his support to NDA is unbreakable.
Yeah, so one point I want to add before I wrap and toss to the next show is that Chandrababu Naidu, is one of the early reformers in this country. In the mid-90s, in the early 90s, it was Dr. Manmohan Singh. After him, he was the one who ushered in a number of reforms, be it power, be it administration, and he was a pioneer in technology. He is a tech man, he is an IT man.
Exactly.
He has got a different vision, and I think he kind of fits into the vision that has been set for India as a whole.
Exactly. And who can discount the high-tech city of Hyderabad that was once a dream and which was built under Chandrababu Naidu. So we all have seen the kind of reforms, and now the man has got back in the power again and is promising a whole host of things to Andhra Pradesh. Now it is only for the people of Andhra to look forward to for next 5 years that what exactly comes out.
Right. So that's very clearly the latest development in the political scenario. Chandrababu Naidu is going to go to Delhi, visit Delhi, have meeting with the BJP leadership, and then the next move will be there. We'll keep reporting. Coming up next is more action in the markets and in the political scenario. Thanks for watching.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
Welcome, you're watching the Small and Mid Cap Show. I am Mahima Vachrajani and with me is Harsh Saita. Well, before we move on to one management, Purvankara, and the other a banking analyst that we're going to speak to today in this show, let's take a quick check on how the markets are panning out to be. Well, after the bloodbath we saw yesterday, the markets are have cooled off a bit. Now the Nifty in green at present as we speak, trading in a range of around 339 points, up right now around 1.6%. Sensex also trading in a range of around 1100 points, up 1.5%. In terms of the broader markets, if we can see, Midcap 150 is trading in a range of around 500 points. Midcap 150 is also up around 1.5%. Small cap 250 is also up around 1.6%. So both benchmarks and the broader markets are going hand by hand, hand in hand. Well, in terms of Nifty contributors, if you can pull up the contributors, the FMCG pack is clearly stealing the show. ITC contributing 38 points, HUL contributing around 43 points. There's Infi, M&M and HDFC Bank, which is pulling up the Nifty right now. Something that's weighing down the Nifty include L&T, SBI, Power Grid, NTPC, BPCL. If quickly we can pull up the advanced decline ratio, the breadth of the market today is skewed towards the buying side. The ratio is approximately 1.4 times, around 1100 stocks advancing and 800 stocks in the decline. But Harsh, FMCG is clearly stealing the show today as well. What do you think?
Well, yes, absolutely. Even the broader markets largely in line with the benchmarks, Mahima, as you said. You know, let's quickly look at sectors. Let's pull up the sectoral charts. Of course, FMCG up and away. We'll zoom in on that one. But so FMCG consumption currently the themes. But look at auto up 4% as well, along with pharma, IT, some of the defensives doing fairly well outside of that FMCG basket as well. What's really seeing pain? Well, realty, which was down and out yesterday, continues to be in pain. Infra seeing some more pain, and you're also seeing pain within the PSU bank along with the Nifty bank as well. The Nifty bank currently, of course, in the green, but nonetheless it's flip-flopping between the red and the green. So that's currently
how it's playing out. 0.9% higher on the Nifty Bank. Those are your contributories. All three of your PSU banks within the Nifty Bank trading well in the red. That's currently the story, but private banks doing fairly well, so no complaints on that front. And the Nifty Private Bank also is up 1.5% in trade. But let's pull up the sector of the day, the FMCG index in terms of all its constituents, and pretty much all its constituents trading in the green. So you're seeing a solid 6% uptick in FMCG, and that's what's leading the rally in markets, at least for today. The India VIX has cooled off, so some amount of volatility seems to be, or rather some amount of sanity in volatility seems to be coming through as well. But we have with us Abhishek Kapoor, who's the group CEO at Purvankara, to talk to us about, of course, outside of Q4 and what trends he's seeing in the market, the latest with regard to the new launch. Talk to us, sir, about the new project that you've taken up. What's the kind of GDV, what's the kind of potential, timelines, margins, what's the expectation?
Firstly, thank you, Harsh and Mahima, for having me on the show. So the new project we're talking about is the Thane one, which we have acquired. We are looking at a GDV of 4,000 plus crores in this particular project. It's a residential project with attached retail. It's at a very, very prime location in Thane, a very well-developed location. So we are very excited with this entry into the Thane project. And we're looking forward to the launch as soon as we can.
Right. Mr. Kapoor, so Mahima also joining in. I want to understand that, with respect to this project, how does the funding look like? How are you going to source the funding from?
Look, Mahima, that's a good question. So what we're really doing is, if you see our cash flows, they are very robust. We have collected over 3,600 crores last year. And we have an operating surplus of about 1,270 odd crores with net operating surplus of more than 500 crores. So business itself is generating a lot of internal accruals. And of course, our debt is on a constant rotation because a lot of it is self-retiring. So a large amount of it is coming from within internal accruals. And wherever we require capital, of course, you heard about the HDFC platform. And we are looking at partnering with capital providers, which is equity-like in nature, and raise more capital for further acquisitions wherever required.
Got it. And Abhishek, how's the Mumbai projects really playing out for you? Because what we've been hearing is pricing in Mumbai is holding up very, very well. Talk to us about the latest trends, especially from the Bombay market. How's it playing out as of now? Because we had a report which came out sometime early this week, which was talking about pricing in Mumbai being, or rather sustaining.
Look, I believe that pricing in Mumbai will continue to sustain, and I would expect it to have a single-digit appreciation on an average annually. So it will remain stable, and in my view, it will sustain because demand-supply situation, the way it is today, is fairly balanced, and we are seeing continued traction in terms of absorption numbers. So my view on the depth of the market is very high, and we know we move volumes here, and this is one of the largest real estate markets in the country. So I'd like to believe that we'll continue to see that trend and it will remain stable. In fact, I personally believe that the volumes will continue to grow in this market.
Understood. Mr. Kapoor, on the financial aspect, of the company, as per Q3 FY24, your debt was around 1,700 crores, and Q4 it went to around 2,150 crores. So, I want to understand as to, going in FY25, what does the debt number look like, by the end of FY25, let's say?
See, look, I think I'll answer this question in two parts. One is the way we look at debt is in context of the business that you're doing. If you look at our debt trends for last 4 years, our debt has come down from about 2,100 rupees a square foot to about 870 odd rupees a square foot on per square foot area under development basis. What I mean by that is that relative to the area which is under development, your debt per square foot is coming down, which means whatever interest savings you're having, you're adding to the bottom line. So that's point number one. Point number two is debt there are two parts of debt. One is which is self-repaying, self-generating, where we have already launched the projects, and that's in excess of about 2,000 crores. So we see that continuous repayment will continue to happen from the project itself. Having said that, obviously new acquisitions will happen, and they will be done from a mix of internal accruals, and a lot of that will be where we are reallocating capital from one region to the other. So we will see a fairly balanced debt equity approach going forward. Having said that, I think what's very important is that over next 3 to 4 years timeline, we look at further optimizing our debt and bringing it down, which is the general trend that we are working towards. So I think over a period of time, over next 3 to 4 years, you will see significant bringing down of debt.
Okay, Abhishek, I want to again switch focus back on the latest project. 4,000 crore of GDV, how quickly do we launch? Of course, you've just about acquired a parcel as of now. So how quickly do we launch? And where should we go in terms of the margins on this project and completion?
Look, so as far as the project is concerned, our target is from the date of deployment, all the projects we launch within 9 to 12 months. So our goal will remain the same. Target is to try and launch it within this financial year. So therefore, before March, that's the target we're working towards. Having said that, I think, as I said, our margins in the past also have always maintained is on an average across markets and regions for the group is at about 30%. Some may be lesser, some may be higher. But as far as this project is concerned, we believe that we will get to that target margin of about 30% here. EBITDA margin.
Sure. And Abhishek, what's the pipeline of launches in this year? How many launches are we looking at? And how many new projects, acquisitions are you looking at in terms of land acquisitions?
That's a good question. So this year we are looking at about 14 million square foot of launch already, which is in the pipeline. That obviously did not include Thane, so that will get added. Now, as far as the acquisition is concerned, if you see today we have about 32 million square foot under construction. We have a balance of about another 31.5 million square foot, which is yet to be launched, of which we will take about 14 million to market. So approximately 22 million will be left with us. What we intend to do is replace what we have already sold, which is last year we sold about 7.35 million square foot. And this year we are, as of today, we are talking about 14 million square foot. So we need to replace that inventory and go back to 40 million square foot odd of land bank so that we can continue to grow. So our goal will be to acquire between 18 to 20 million square foot in this financial year and early next year.
Understood. One last quick question to you, Mr. Kapoor, that, this 18 to 20 million square foot that you're planning to add, your non-Bangalore projects now comprise of 47%. So going forward, what will be the mix like? Like what kind of geographies are you planning to expand to? And geographical area-wise, what are the margins like?
Look, so I'll answer it in two parts. One is the geographic spread and the way we are looking at the business. Clearly, the focus is to scale up our West business. So eventually, next 3 to 4 years, you will see West contributing almost 40% of our business, and South, of course, we'll consolidate our position. But what you need to look at is in the context of the growth. So because our growth is going to be pretty fast paced, as you saw last year, we grew by about 90% in terms of pre-sales numbers. And we intend to continue to push the growth numbers in the consolidating market. So therefore, while we will scale up our West operations and the contribution, we'll also continue to consolidate in the southern region. Now, as far as our projects, launches and geography is concerned, it will be literally between Bangalore, Chennai, Pune, Mumbai. We are working on Hyderabad, but yet to succeed there. And we are hoping to add NCR very soon.
Understood. It's been a pleasure chatting, Mr. Kapoor. Good speaking with you, good perspective. Thanks so much for coming in and speaking. Also, we'll slip into a very short break, but just before that, quickly marking out the benchmarks, 2% higher now on both the Nifty and the Sensex. So positive clearly in trade today now that we're seeing strong positive, 1.9% now on the Sensex. But we'll slip into a very short break. On the other side, we have Bernstein senior analyst and senior analyst in banking, Pranav Gundlapale, to speak to us about the road ahead where financials are concerned, because that seems to be the consensus buy.
Different people believe in different things. In cricket, some hail the king, some believe in God. Some wait for Mr. Right, some believe in swiping right. Some run away from risk, others run after it. For some, kids mean babies. For others, kids mean puppies. Some want a home to settle in the future. Some want to roam the world today. Some make a career in a company. Some make a career out of building companies. But when it comes to money, everybody believes in only one thing: profit, profit, profit. And for profit, watch only NDTV Profit. We all love money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Let's be real, guys. There are many financial experts out there. Which stocks to target? What's good for long term? When to buy? When to sell? How do you stay ahead of all the financial noise to achieve your dreams?
Welcome back. You're watching the Small and Mid Cap show. Well, before we move on to the PSU space, the Telugu Desam party won by a landslide in Andhra Pradesh with Chandrababu Naidu coming back as a chief minister. In a press conference this morning, Mr. Naidu said he will meet PM Modi shortly.
We are in NDA. I am going for NDA meeting. In course of time, anything, we'll report to you. Thank you.
Well, that was Mr. Chandrababu Naidu saying that he'll meet the PM shortly. But moving on, the PSU banking space took an extreme hit yesterday in the trade. It was down 15%. But right now, the PSU banking space is doing well. It's down only around 0.3%. But to talk more about the banking space, we have with us Pranav Gundalapalle, a senior research analyst at Bernstein, who joins us now. Welcome to the show, Pranav. My first question to you is that you know, the PSU banking space took a lot of hit yesterday. Do you think this is the right time to buy the PSU bank stocks?
Good morning. Thanks for having me on the show. See, I think from a PSU bank's perspective, the peak in terms of its operating outperformance versus the private sector banks is probably behind us, right? So from a pure operating metrics perspective, we would still prefer the public sector, private sector banks versus the public sector banks, number one. And the sharp, decline yesterday was on the back of sharp gains in the prior week. Right? So I think net on a year-to-date basis, we are still, sitting with reasonable gains for most of the public sector banks. So not particularly cheap compared to what their operating metrics are. So no, we don't see a big hurry to jump in at this point for banks like NSBI even, where we have a market perform rating for the bank.
Understood, Pranav. Pranav, just some perspective with regard to PSU banks. What's caused this huge jitter? It's a 15% move in a single day. What's your sense? Is there something fundamentally different if BJP has a majority versus does not have a majority?